What's going on, guys? Welcome back to another video. Today I am starting my new mini series on how to start day trading for beginners in 2026. So first things first, this video is sponsored by Avant Capital. If you're looking for an affordable life insurance solution, make sure you go get a quote with them. They're super reliable. Second of all, why am I making these mini series? Because when I started day trading, I was looking for every single piece of information from multiple content creators from different videos on YouTube, and I had to piece everything myself, piece by piece, on how I can actually get basic knowledge of day trading. What do I even do when I open the charts? Because most of these guys that make the content, they don't actually explain you on how you can start day trading. They just show you all these crazy strategies and then they show you their profits. But nobody actually, well, I'm sure there's people out there on YouTube that do, but I told myself that I need to help people get basic knowledge of day trading and help them get started. I don't have any Discords. I don't have any paid courses. This is going to be my only mini series on YouTube. Let's talk about day trading. If you want to get into day trading, you're going to have to do a lot of research. You're going to have to get a lot of knowledge. And that's why we're starting this mini course. So let's dive into the first slide and see what we can learn. So what is trading? Understanding the fundamentals. So trading is the act of buying and selling financial instruments such as stocks, currencies, or commodities with the goal of generating profit from price movements, right? Sounding pretty simple, guys. This is not rocket science. Traders analyze market trends, economic data, and company performance to determine when to buy low and sell high. Obviously, the main goal of trading is to buy low, enter position when price is undervalued, sell high, exit for profit when price rises. That's if you're going long. When you're going into a short position where you think the price is going to go down, you can short it and you can still make money on the price of an asset going down as well. But we'll get into that as the series goes, because right now we're just trying to understand what trading actually is. So people analyze it. They study trends. They study the data. They study the market signals. Also, news play a very big impact in market volatility. Right now we have a very volatile administration, I would say. Our president can say something and the price can go upswing, or he can say something that's not good and the price can swing down. Obviously, as a trader, you want to capitalize on volatility because that's how you make money. But you also need to learn the risk management that we'll get into as the slides go. So another thing you guys need to understand is that trading isn't just about money. It will completely change how you perceive risk, discipline, and yourself. One thing I will say is that the trading journey is not just a financial journey. It's a journey that will teach you things about yourself you didn't know you had or you don't have. When starting trading, you will most likely come out a different person. You will find out things about yourself you didn't even know possible. Your perception of money will be completely cracked down. The way you perceive money will be completely different when you start trading. Because what do you mean I can work for $20 an hour to make $200 in 10 hours? Or I can hop on a chart and make $200 in a matter of 5 minutes. But most important will probably be the discipline. Again, rules must be followed without exception. Patience, the best trades come to those who wait. Emotional control, fear, and greed are your biggest enemies. This is super true. A new money mindset, how money really moves in the markets. The emotional control, the fear, and greed, again, are your biggest enemies, because you can make, let's say, $3,000 in a day and then continue to trade because you want more and more money, and you can get caught and end up negative $2,000 on the day. That's what greed will do to you. The title of this slide, More Than Money, It's Personal Transformation, is super true. If you don't stick to your rules, if you don't stick to your discipline and consistency, you will not succeed in trading. You will enter trades just because. It's kind of the same thing as being on a diet, I would say. Why do people eat? Most of the people eat because they're bored, you know? Why do you take trades? Because you're bored or you're FOMOing in. For those people who don't know what FOMO is, FOMO means fear of missing out. So if you see a trend going up and you're like, I need to enter because I'm not going to make any money, and then all of a sudden the trend reverses and you lose, FOMO is a very bad thing, and you need to learn how to control yourself. A lot of people do good in trading, but percentage of people who make it in trading, who actually make money, is very slim, because at the end of the day, on the charts, it's you versus you. Well, it's also you versus the market makers, but besides that, it's you versus you. If you don't have the discipline and the patience, most likely you're not going to succeed in trading. From what I've seen, the best traders in this space, they could wait hours for the setup that they need, execute, risk manage, make their money, and hop off the charts. The most unsuccessful traders that I've seen in trading, they stay on charts 24/7. They take insane amount of trades and they can't control themselves and they FOMO every single setup. And that's how most of the people lose money, because they treat it as gambling. So let's talk about trading styles, guys. Very important. So make sure you write this down. There's different types of trading. So there's scalping, which is rapid fire trades. Capturing tiny price movements requires intense focus and fast execution. It says 50 to 200 plus trades a day. This is I wouldn't say it's not true, but there are people who overtrade like that. And scalping is very rapid fire, as it says. Literally seconds to minutes. You get in, you get out, you capture your profit, and you can do it to multiple times a day. You've probably seen a lot of people on the internet just getting in and out super quick. That's what scalping is. Day trading, minutes to hours. It's all positions opened and closed within the same day. No overnight risk. Requires strong strategy and discipline. Again, it says 50 to 20 trades a day. A lot of people do that. I don't recommend it. I recommend between 2 to 3 trades a day, 8+ setups. If your setup doesn't come, then it doesn't come. Don't force the trade. So for swing trading, you're obviously looking at the charts less. Maybe you check the charts one time, two to three times a day, but you're confident that in the long term, the move is going to happen. So that's what swing trading is really all about. So there's also position trading, long-term approach based on macro trends and fundamentals, least time intensive, closest to investing. So obviously holding positions for longer time, 1 to 10 trades a month. The best 2 trading styles, it's day trading and swing trading. I personally love day trading. I think it's definitely something people should learn as a skill. You can start it as a hobby, turn it into full-time. But also, if you're working full time, you can also have it on the side as well. I think that it's one of the best skills that you can add to your skill set. So let's talk about the types of markets that are out there. So what can you actually trade? Stock trading, you can trade shares of the public companies, Apple, Tesla, Nvidia, whatever you really want. There's futures trading, agreements to buy and sell assets at a future date and price. There's forex trading, currency pairs, largest market in the world. Options trading, contracts given the right to buy, sell at a set price. There's also crypto trading, which is 24/7 nonstop. Digital currencies like Bitcoin, Ethereum, and Solana. Bitcoin is obviously the biggest crypto there is. Pretty volatile, I'll tell you that. And it's open 24/7 to trade, where in futures you have the weekends off and you get an hour break every single day. In crypto trading, you're not going to have that. Crypto trading runs 24/7 without stops. So a lot of people love it for that, but it's also super volatile and it's super brand new, the crypto market. But there's also prediction markets, which is, I call it gambling, but they want to call it prediction markets. That's the new thing everybody's adding. Like Robinhood added that, Coinbase just added that. Bet on the outcomes of real world events like elections and sports. Again, basically legalized gambling is what I call it. So you're probably thinking to yourself, what is the best way I can approach this and what is the best market I can get into? So it all depends on your situation. If you have funds that you want to use for trading, you can do that. But you also, if you have a tight financial situation, you can also use prop firms, which lets you trade with companies' money instead of your own, which we'll get into in a few slides here. But futures trading and forex trading, and now some companies are even offering prop firm trading for crypto as well. Futures trading, I would say, is the most lucrative, I would say for sure, especially because of the prop firm space growing. Options trading is a little bit more complicated. Stock trading is just a regular old-fashioned stock trading. Not much to say about it. Prediction markets, guys, is gambling. You definitely want to stay out of that. Forex trading. This is one thing I'll say about forex trading, about currency pairs, is that a lot of people have been migrating from forex trading into the futures trading. I've known a lot of people personally who went from forex trading into futures trading, and they love it. And they said that they wish they transferred from forex to futures much earlier. You're probably thinking to yourself, well, okay, I'm going to pick my market, but where can I actually trade it? So this is where brokers, exchanges, and prop firms come to play. And what is the difference between all three of them? So the broker that's your money, a middleman between you and the market. They hold your funds and execute orders on your behalf. Well, obviously you make the trade. They do have commission fees for their trades. So basically you are on your own. Anything that you lose is yours. Anything that you make is also yours. So there's also exchanges like Coinbase and Binance that are mostly for crypto, a direct marketplace where buyers and sellers meet. Crypto exchanges are open 24/7. Stock exchanges have set hours. So this is very important that stock exchanges have set hours and crypto exchanges are open 24/7. So if you want to place an order on the stock and it's past 4:30, you're not going to be able to put that order in. But with crypto, you can put that order in right away. Direct access, low fees, and also you do have leverage that you can use on those exchanges. For example, if you want to trade crypto and you say you only have $1,000, you can use leverage, which is, I don't recommend using leverage unless you're a super experienced trader, but you can leverage with 10x, 15x, 50x, 100x. So if you have $1,000 and you're using 10x leverage, you have $10,000 that you can open a position with, but you will have liquidation prices. And if price goes against you, you can get liquidated and lose all your money. So unless you're a super, unless you're a super experienced trader, do not get involved with leverage. Or if you're a gambling degenerate. This is what a lot of people love is the prop firms. There's a bunch of futures prop firms out there. There's also forex prop firms as well. Now they're coming up with crypto prop firms, but it's a firm where you can get funded by passing an evaluation. And once you pass the evaluation, anything that you make through their accounts, you split with them. So a lot of prop firms have a 90% to a 10 split, and you can take out like 50% of your balance into your bank account. So prop firms are probably the best way to go about this if you're low on funds and you don't have a lot of money and you're just getting started. There's prop firms like Top Step. I would say is probably the best prop firm. So as I said, you pass an evaluation, then trade their capital and keep a share of profits. Trade big without big capital, but you must pass the challenge first. And once you pass the challenge, you have access to the account. You can take payouts of real money into your bank account. So this is actually the next slide that we're going to talk about is your money versus prop firm money. Which path is the right for you? So if you use your personal funds, you will have complete freedom, no rules or restrictions. Trade at any market, any size, any time. If you're trading cryptocurrency, keep 100% of all profits. No evaluation or challenge required. Risk, you can lose your money. Requires sufficient starting capital. Good for crypto, stocks, and small accounts. So again, if you are just getting started, most likely you don't want to use your personal funds, because if you're using $2,000 and you lose that, you are probably going to be pretty upset, because I would be if I lost $2,000 on a day. With prop firms, it's a completely different game that we're going to dive into in a second. But personal funds, unless you're a millionaire and you just want to gamble around while you learn, definitely recommend personal funds. If you're just getting started, I would recommend using prop firms for sure. How does a prop firm really work? So let's talk about, for example, Top Step, probably the most popular prop firm that's out there. Basically, you start with what is called a trading combine. It's an evaluation that you buy. Usually costs like $100. So you pass the evaluation, your profit target is $3,000. You have to make that $3,000, but you're not in a live environment. So that means you're not in the real market. You are in a simulated market. It's the exact same prices of the real price movement, but the trades that you're taking, they're in a simulated environment. It's like paper trading. You're not trading with real money. So once you pass that evaluation and you make your $3,000, you get funded. Once you get funded, anything that you make in that is yours to keep. Definitely something you want to look at, but we'll get more into prop firms as we go with this mini series. But you just have to get a basic idea of what markets are there and what prop firms are, and if you want to use personal funds or prop firm funds. We're getting close to the end of the episode here, guys, but your trading roadmap is 5 steps to go from zero to trading. So what you want to do first is you want to pick a market, crypto, stocks, forex, futures, whatever you think that I explained you think is better. I personally recommend the futures. Choose one market to master first. Don't spread yourself thin. Crypto is popular for beginners due to low barriers and 24/7 availability, but you will have to use your own money as well. And crypto is a brand new industry. I think it's been around less than 15 years. I don't remember really. Again, the 24/7 availability is what makes it super lucrative, but you don't want to stay on charts 24/7 because that's how you become a gambling addict and you don't succeed in trading. So second thing you want to do is choose a platform, broker or exchange or a prop firm. We'll get more into it as the series goes on, but open an account on a platform that supports your chosen market. Compare fees, tools, and ease of use. TradingView is also a thing you're going to be using for trading. We'll get into that as well. Right now, we just want to have a basic idea. Third thing is going to be learn basic strategy, study price actions, key levels, and how you manage your risk. Never risk more than you can afford to lose. If you are using personal funds, you can start with the demo or small capital. You can paper trade, and then as you go and you grow, you scale up. Once consistently profitable on the small capital, scale up, apply to multiple prop firms. You can even copy trade where you're trading with 5 accounts, but you're taking the exactly same trade. So if you making $100 on one account, it copies across all 5 accounts, so technically you're making $500. So there's a lot of things that you can learn and you can apply and add it to your skill set that you can use, guys. It's very important. I'm telling you, trading is one of those things that you can really change your life if you really just lock in and learn all the basics and apply yourself. This is the end of our first episode, guys. The market rewards the prepared. Learn before you earn. That's probably the best quote that you're ever going to find out there. Trade the plan, not the emotion. Protect your capital. Above all, consistency beats big wins. Like and subscribe to start your journey, guys. I hope you guys found some value in this episode. I hope you took some notes as well, but we're going to be knocking out these episodes and I'm going to try to take you guys on this journey. My goal here is to turn you from this little leech into a butterfly that can spread your wings and fly and make the crazy money that you see on the internet and just, learn a new skill. So I'll see you guys in the next episode. Hope you enjoyed the video.